Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, all right, good morning guys. Welcome back to another live stream. I'm just making a quick update here to a trade alert that I currently have inside of our Discord. All right, good to go. So, hope everybody's doing well. We've got kind of a light week here, guys, but despite the light week, there are some events that could cause some serious market volatility. The other thing I want to point out, look at Bitcoin, guys. Bitcoin breaking that 92,500 level, really interesting. Broke into the 80s again. And we got to talk about this because I actually take this as a bit of a sentiment barometer for retail trading. You know, I like the idea of Bitcoin, but you guys know if you watch my channel a lot that I am not really a buy and hold kind of guy for Bitcoin. I have mostly, I've traded Bitcoin quite a bit, but I'm not like a long-term, I wouldn't say I'm a disbeliever. I'm just, I prefer to trade it. It's a great momentum vehicle. Well, right now, momentum for Bitcoin has really, really shape shifted here. In fact, I was looking around at the crypto space on Twitter. What do you call that? The Twitter crypto crowd. They're kind of having a bit of a panic here with that level of support holding for so long. And now you've got, what was supposed to be kind of Trump presidency. This is the time of the crypto world. You're seeing some disappointment there. And I actually don't particularly think that that's over, especially if we close like we did yesterday at the bottom of this range. That was a deadly candle yesterday. And now you've got the follow through. So, it's kind of like when NASDAQ closed with that deadly candle on Friday, you had the bit of a dead cat bounce and then the follow through to the downside. There's some interesting stuff happening in this market right now that I do think we need to acknowledge. A lot of risk assets, guys, have had a particular behavior that is seemingly changing in front of us. What I mean by that is if you look at this chart, right? If we take crypto, Bitcoin as our risk proxy, what you notice about these is that moves lower are not very elongated. They're not very extended. There's not very much follow through, right? There's very little bearish follow through in this chart for the last several years. You had this kind of correct sideways downward market, but this is child's play compared to what Bitcoin is used to in serious drawdowns, right? This was a 34% drawdown. Give me a break. You're talking about the crypto crowd who's used to 90% drawdowns in cryptocurrency. So my point with showing you this is that, look, the sentiment here, could Bitcoin go to 150, 200,000, $1 million? Sure, maybe it does. I'm not going to be the one to tell you, oh, it certainly is going to. There's plenty of that on social media. Right now, momentum has shifted bearish. And I think that, there's a bit of a sentiment shift in this market. A lot of people went into this year thinking Trump equates to rosy and rainbows for markets. And, look, you might still get a good 4-year period in the stock market, but what if the first year is ugly, right? We're starting to see risk assets not hold up well. It's such a unique character shift. I stare at these charts every single day. I know many of you guys do as well. What we've noticed here, look at this, spikes on the bottom, holding support levels, resiliency for risk assets. Never mind that it's Bitcoin. You could point the same thing to stocks, right? You could even point to one of the weakest areas in the stock market. Small caps have still been in this kind of grindy uptrend, even though they're kind of the worst performer of the group kind of thing. And yet still what you can see is that for some time, pullbacks were bought reasonably quickly and reasonably aggressively, even on the worst performing index of the major four that we discuss on this channel. I mean, let alone look at NASDAQ. NASDAQ dips are bought so aggressively. And now I think you're on the cusp of actually seeing some market momentum shift bearish, which I don't think we've seen in a long time. Look, I'm not short the indices. I'm not making a bearish bet that they continue lower. So I could say this, and what if I'm right a bunch and I don't make any money out of it? I'm willing to say that. But there is also the possibility that, you know, I think you have to get more price action short term decidedly bearish if you break this key level on the NASDAQ. Now for Bitcoin, I would say chart looks bearish. Chart looks straight up bearish for Bitcoin, right? It doesn't mean it can't reverse and start breaking out to the upside, but right now, this momentum is not pretty. It's why, again, like I said, if you go to the cryptocurrency Twitter side of Twitter, there's a lot of panic going on. Oh my gosh, this was supposed to be, you know, Trump 2.0, Bitcoin to the moon. And who knows, maybe it will be. But right now, there's a lot of headwinds that are pretty decidedly cautionary for markets. You have tariff concerns. That's nothing new. Trump actually reiterated that the Canada and Mexico tariffs are still, I think he used the term on schedule. And people are like, okay, so we still have tariff concerns. Those, you know, yes, they pushed it out a month, but it's still a real thing, and it still seems like it's happening. He seems very adamant about reciprocal tariffs, basically matching all the tariffs that are imposed in the U.S. Exports. He wants to match them pretty across the board. That seriously shifts a lot of trade relations globally, as the U.S. is kind of centric to it all. So yeah, I mean, it's an interesting time. You also have the breakdown in momentum stocks. Take a look at like Palantir, right? So if you're watching indices, there's some serious bifurcation in this market, some serious divergence between value stocks and growth stocks. Growth stocks are taking a serious tumble. Here's Palantir, peak to trough, guys, almost 30%, 28% down from those previous highs. Take a look at, what's some other names? I mean, you could take a look at Tesla, right? Tesla's gotten hammered. Tesla from peak to trough down 33, 34%, somewhere in that neighborhood. So you're getting some interesting moves. I mean, NASDAQ's holding up all said and done pretty well with just about a 4% drawdown. S&P 500 peak to trough here, we're looking at currently about a 2.6% drawdown. So my thought on this is that these things have room to still pull back further and it to still be very healthy in terms of a long-term bullish perspective. So I am not saying, you know, oh, look, market's bearish, we're going to zero. But I do think that this market has a lot of headwinds, and I would not be surprised if you do see S&P, NASDAQ take a bigger tumble. I think that a 5% to 10% correction in the S&P 500 is very reasonable. Somewhere in this territory, like if that happens, I'd say that's very reasonable. Probably would be a dip that I'd start buying. But that's just kind of my thoughts on that. So anyways, gold also seen a little bit of a dip here, but look at the resiliency here. This is the difference in price action that I want to point out. You know, you look at crypto indices, what we're seeing here is the candle bodies are closing towards the lows. Whereas with gold, very rarely are you seeing that. And the one time that you did recently, buyer stepped right up. So there's a chart behavior here on a technical basis that looks really strong for gold. You know, I've been saying this for weeks now, but a lot of people are calling for pullbacks. Maybe it will finally happen, but again, not a game I'm trying to play. If you're trying to time the pullback on gold, you may join the graveyard of fallen soldiers around you. It's been a tough grind for gold bears for the last few years. Let's see. NASDAQ opens up here it just opened up. So the US stock market is open now. Here's the 5-minute chart so we can take a look. So we'll see. Again, like I said, I am a overall willing to buy the dip on tech stocks and on companies that I like, financial companies, but I'm certainly not heavy going in right now for the kill, if that makes sense. Like, I have a lot of cash sitting on the sidelines ready to deploy in US stocks. I've been cash heavy. Um, Warren Buffett is super cash heavy. Did you guys hear that? He is incredibly cash heavy. And people will say what they want about that. They'll say, oh, well, he's not trying to time the market. He's not bearish. He's not. But here's the thing. Warren Buffett had the Berkshire Hathaway meeting recently, shareholder meeting. He mentioned that, well, actually, I don't know if he mentioned this, but this is what the crowd heard. He basically doesn't have a whole lot of appetizing things to buy right now. You don't even have to hear him speak to know that, if you know he has a whole bunch of cash. Warren Buffett's sitting on a massive all-time record high pile of cash right now in his portfolio that he runs for Berkshire Hathaway. So take that as you will, but actions speak louder than words. You can say, oh, Warren Buffett's not bearish, he's not trying to time it, but him basically saying through his actions, not deploying that capital into stocks, tells me that he simply doesn't have something that's attractive to him to buy. So is it fair to say Warren Buffett is waiting for better deals? Yeah, I mean, this is the value king, right? This is the most legendary investor of all time, and he's sitting around waiting for better discounts, better prices. And sometimes that can feel silly when the market's ripping higher, but when it is starting to drop, you're very thankful if you have cash on the sidelines ready to deploy should you get better discounts and better prices. So yeah, he just finds no stocks in the moment. So Marcus, you could say like, oh no, that's not bearish. I would say that is bearish. If you're saying I can't find good discounts, good deals, then you're saying the market, I kind of think, is expensive. And if the market is expensive, it doesn't necessarily mean you're shorting the market. I don't think he's short the market at all, but him being cash heavy, some would argue being a cash heavy position is kind of a way to short the market because you're just waiting for better prices. You believe that there could be better prices around the corner. So we'll see, but just some fun things to think about there. Taking a look at the dollar index here this morning. Let's pull that up. So dollar index kind of continues its trend lower here, struggling, it seems like, to really find any to find its footing. Dollar index seems to be kind of shifting from this legendary bullish trend to now kind of a pretty weak bearish trend, in my opinion. We've talked about this many times, the economic heat map flashing red. Not coincidental that this all started turning red, and then to follow for the next few weeks, we've seen bearishness in the dollar. I mean, the economic heat map started printing red. Dollar index has been following through to the downside recently. So I think that's really interesting and something to watch. I do think the dollar index probably has room to continue pulling back. Do I think that the dollar index is, doomed to go way, way down? Not really, because we still have sticky inflation in the United States, which should keep bond yields elevated, which should be a prop up for the US dollar. But you have weakness in the economic growth department, and that weakness, I think, justifies a bit of a repricing on the valuation of the dollar versus other currencies. And I think that weaker dollar could be something that is potentially bullish for metals. It's the same logic within our system, right? The same reason the chart is flashing a whole bunch of red on the economic heat map is why gold and silver are getting good readings on the edge finder. It's because a lot of that economic data that we just discussed for the US dollar is flashing red. And so when we take that into account, we say, okay, look, economies around the world are seeing a bit of contraction. So maybe it's reasonable to think the dollar index specifically, which is kind of the most important, largest economy, showing some contraction compared to forecasts. Maybe it's reasonable that the dollar gets repriced a little bit. Maybe we do see dollar head back to 104.5 and lower even. We'll see. But trend right now seems to be to the downside for dollar index. So we'll see. And again, you have the dollar moving lower but it's not moving lower because inflation is getting better. That's the thing. A lot of people say, well, Nick, dollar down, stocks should go up, right? But it doesn't work perfectly like that. Specifically, if the dollar is going down on growth concerns, usually stocks are also going down at the same time. I had somebody comment on a video recently. They said, Nick, you don't know what you're talking about. Dollar down, stocks up, dollar down, dollar up, stocks down. And that is an easy thing to kind of think based on the last few years, because the dollar going up signaled inflation was rising mostly for the last few years. But that's not how the dollar and the index truly, the relationship works. The dollar index going down doesn't have to be because inflation's going down. Clearly, we see inflation going up, yet the dollar's going down. This can be confusing, and this is why currency trading is way harder than people think it is. The dollar can go down because growth metrics are missing forecasts, and at the same time, you can also have rising inflation, right? So you have to understand the mechanisms. You have to understand how this stuff works to really score it and to really actually make decisions off of it. That is what the Edge Finder specializes in. Is we've carefully gone through every single one of these data points and calculated how it generally should point bullish or bearish for all of your favorite assets. That's kind of the idea behind the Edge Finder. It takes some of the guesswork out of it, and the idea is hopefully it helps you to spot the fundamental trends and understand them easier without having, years and years and years of dedication, like, a lot of traders who stare at the stuff all day like myself do, right? So the goal is to bridge the gap a little bit, make fundamentals, how important they are, they drive the markets, but they can be really hard to get a picture on just listening to content. You can listen to stuff for years and it's still very confusing. So having the right tools is imperative if you want to be a fundamental trader. If you'd like to try out ours, the Edge Finder gives you access to a ton of economic data, heat maps, as well as sentiment indicators. You can track what institutional money's doing through the commitment of traders data. You can pull up retail sentiment, see what the crowd's doing. You can look at the put to call ratio to see what the options volume is looking like. One of my favorite indicators on the Edge Finder. You can actually see we're seeing a big spike up in the put to call ratio, showing a little bit more fear in this market, right? We were very optimistic. When you get down to these lows, guys, what that's telling you is that stock market optimism was very high. Can I show you one more on this? Check this out. Here's gold. So gold, this is crazy. So gold optimism, right? People buying calls on gold reached a peak and has actually cooled off. This to me signals, okay, sentiment's not stretched. Gold could potentially continue its stretch higher. We're not, when we tap into these overextended optimism on the price of gold, huge call demand, right? And gold does trade on the options market. You can trade GLD. You can also do gold futures contracts on the options market. So we can track that stuff. And look, when we have huge call demand, I would say, okay, pump the brakes. That may be short-term overbought kind of territory, but look at this. We're back to a bit more normalcy here. And that to me signals that gold could continue higher. I've been saying that for weeks and weeks. And I do think that that is the path of least resistance. You may get pullbacks, but I think pullbacks get bought. That's my opinion. I could be dead wrong about that, but that is trading 101. You manage risk, you put a stop, and you move on if you're wrong. So that's my thought. By the way, if you guys want to try out the Edge Finder and all of its powerful tools for 30 days, we'll drop a link here in the chat to where you can try that tool for yourself, see if it's right for your trading. We also have several people on our team who'd be happy to give you some more information, to share some free course material that we have on the Edge Finder. All you have to do for that information to be sent to you is click the link that's just been dropped in the chat, fill out that quick application to let us know that you're interested in hearing more about our trials and learning about how the tool functions. We share the full algorithm for free on our website. So if that is something you're interested in, you don't have to buy anything. You can still just explore the tool, figure it out, try it for yourself. So take a second, make sure to try out the Edge Finder for 30 days using this link being dropped in the chat. So let's see what else we've got. NASDAQ officially moving here lower here for the day so far. This is we're only 10, 15 minutes into the trading day with the market session open for US stocks. Dow Jones actually spiking higher. Is that UNH making a move? Nope, not really. Something Costco maybe. Costco's up a little bit. Let's take a look at some of the I have these kind of high interest stocks on my list. Let's see what's moving. Got, by the way, Bitcoin down another 3.8% today, down to 88,000, guys. Wow. 88,000 getting hit for Bitcoin. You got Tesla taking a sell off here this morning, 319 per share. Intuitive Surgical is a company I really like. Down almost 4% here. CrowdStrike, this is a huge momentum stock, down 16% from the highs pretty quick. Palo Alto, how's this one doing? Palo Alto down about 10.5%. Uber down another 1.3. Palantir, this is probably the most notable retail stock in the market right now, down 28.5%. Fortinet, another stock I really like, would be interested in this one if it gave me a bigger dip, but holding up strong. That relative strength really playing out here. You got only down 6%. Google's down another 1%. NVIDIA, which has earnings, by the way, after the bell tomorrow. Huge report for NVIDIA. Whole markets, I've been seeing memes. I don't know if you guys have been seeing the memes, but I've been seeing memes about NVIDIA and Jensen Huang, the CEO, people making memes saying, you're our only hope, and casting him as Luke Skywalker from Star Wars in the meme. Kind of hilarious because right now this stock market seems like it's on the edge of a cliff, everything kind of taking a hit. Maybe NVIDIA will save the day. Maybe their earnings will come in rock star. Here's your weekly chart of NVIDIA. You know, momentum is kind of broken for this stock. It was this unbeatable kind of uptrend. It's actually been flat for, you know, multiple months now, going back to the summertime of last year. So, you know, I own some NVIDIA. I'm patient with it. It's kind of a long-term thing for me. I actually bought it off the DeepSeek news. Talked about that on the channel here at the time. So we'll see. You got some stocks that are up here today, but mostly continuing to see some sell-off in U.S. equities. So we'll have to see where that one goes next. But NVIDIA, like I said, after the bell tomorrow should be a big market mover. Dollar index here, again, kind of losing that weekly momentum as well. To the downside we go, it seems like right now. Yeah, we'll see. Also, I just wanted to make a quick reminder that if you are not in our Telegram channel, it's completely free to join. Let's do this here. Pull this up. If you are not already in our free Telegram channel, take a second to join. We're dropping bonus content in the Telegram every day. We have bonus clips, bonus videos. So if you're a fan of the show, fan of the channel, and you'd like to get some clips sent to you, we've got clips being shared, free course material being shared, chart markups, trade ideas, all of that is being shared completely for free. If that's something you're interested in, make sure join the free Telegram channel that's just been dropped in the chat there for you. And if you're watching back at a later time, it should be linked in the description down below. Japanese yen also looking good here this morning. My TLT trade is actually really coming to life. Up 1% today on the day, looking great so far. Maybe we're finally seeing some yen breakouts. Swiss yen not cooperating as well, but JXY, the Japanese yen currency pair index, moving with some nice momentum. And the bulk of my kind of trade here is expressed through TLT. I am long TLT. I have been for some time. Went through some drawdown over here. I think I bought it around this area. I can't even remember. I've held it for some time. Collected some dividends for holding TLT, and now we're finally in profit, finally in the green on this trade. I do think TLT has potential to continue higher, especially if trade war fears are realized in any substantial way. In 2018, 2019, when the kind of Trump 1.0 tariffs went into effect and there was this big kind of fallout with China, TLT exploded up 65% from the bottom to the top. I mean, it was a huge move. Will we see the same thing? Who knows? You know, the history oftentimes, it doesn't necessarily repeat itself, but it often rhymes, right? That's the expression. So we'll see. But, you know, I like TLT for a bit of a hedge in the portfolio. I've been talking about this for some time. I do think that you're seeing some economic growth concerns that change the dynamic and could lead to more than expected rate cuts this year. It's part of the reason I also like gold and silver. So thematically, I think interest rates do come down, whether that be growth concerns from tariffs, et cetera. but we'll see what happens with inflation. That's a bit of the wild card this year. Guys, I'm going to throw it over to our next show host. He's back again. Mr. Alan Perez is going to take over the show for a few minutes. Before we do that, let me just remind you, like I said a moment ago, join the Telegram channel if you'd like to stay up to date on the show. We're here Monday through Friday sharing content completely for free, trying to help out the trading community. And up next to do that with you is Alan Perez. Stay tuned. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everyone, or good evening or good afternoon, depending on where you're watching here. It's good to be back. For those that don't know, I'll be here every Tuesday, and then every, I don't know, when there's spots open that I need to fill, I'll be more than happy to hop on. But let's go ahead and talk some currency. That's what I trade. I swing trade FX, mostly the G10. And then my camera. Is my camera off? Uh-oh. Good morning. Good morning.
Hey, Alan, I think your camera froze. You might want to just refresh and come back in.
Okay. 1 second here.
No problem. Technical difficulties. Enjoy this this car driving down the highway. How fast you guys think that thing's going? I'd give it looks like about 60, 69 miles per hour. What do you think? We'll give Alan just a second. And he should be back here. Maybe his camera died. We'll see. If need be, we can always go camera less and just go full screen if that's easier. Alan, what do you think? You want to go cameraless?
I could. I have one of those Logitechs that's plugged into the computer, so it's no battery, but I can go camera. There's no problem.
Okay. Yeah, no problem. We'll just change the screen arrangement so that it's just your screen. We'll still be able to hear you, but that way you can kind of go on with it and not have to worry about it right now.
Alrighty.
Okay, you got it.
Thanks, guys. All right, so where was I here? I'm going to go over some FX pairs. So for those that don't know, I swing trade currencies, the major currencies. And every now and then I'll go ahead and do the minors. And in this environment that we're in, where I have a lot of cash on the sidelines, I'm not really entering any swing trades or anything. Right now, I'm just trading the yen mostly. So I have a swing position on the Swiss yen that I entered right here at this level. And, we're about a good 200 or so pips in profit. But this one here is a long-term position. So I am willing to, if, we break this 165 level, and once, we see that the yen or Japan starts to hike the rates, and if we do see some follow through on the Swiss and, lowering the rate from a half a basis point to neutral, then I can see this trade starting to, move more in our direction. But as far as that, I'm pretty flat. I do intraday at the moment. I am trading the dollar yen because it seems like once we broke this 151 level here, every pullback that we gets sold off. And so there's a lot of opportunity short term here to just, catch a couple income plays. But besides that, I'm pretty flat. One thing I do want to mention here, though, is one that I would have taken is this euro short. That we're in. I do think that the dollar will be stronger than its other counterparts. It may not be as strong as it once was, but I do think if we're kind of comparing, the other ones, then I do think that the dollar will continue to be stronger. So Andre, pound yen to 129. Let me see. So Andre, I will say it could. And the reason why I say that is because when I look at the other pairs, I would have sold off at this 105 level, but I'm a little skeptical. I think that we still have some room to continue upwards. Maybe 106 or 105.7 on the euro here, and then we can go ahead and short. But the landscape really hasn't changed. We really haven't gotten any new data. You have indices going lower. So for now, I think that we could get some more room into maybe some more attractive entries. So Andre, if you're looking for that 1.29 level, that could be a possibility because I'm on the sidelines myself, waiting for something like 105.7, 106 on the euro. Can we view Bitcoin and the recent drop? What's the next best levels for support? So for Bitcoin, that's not something I really trade. It's really volatile, but I'll definitely take a look at it for you. If I'm just looking with a fresh pair of eyes here, this may be out of reach, and I understand that this may take a while for it to happen, or it may not. But a level like this would be the most sense for me. Um, but it would take a lot of risk off and a lot of uncertainty. Strong support. If that's something that, yeah, Bashi, I agree. It's very far away for sure. But Bitcoin moves a lot, and especially when you're considering a lot of money is parked into these levered Bitcoin plays. If those, longs get washed out, then I could see something like this falling pretty quickly here. And you have things like the VIX that are spiking up a bit, which could, create some volatility. Um, yeah, Ross, we got to see what happens next week. That's what I'm doing. For now, I'm kind of on the sidelines because, like I said, I could have gotten on my positions here, but considering that, for example, when the CPI print came out from 2.9 to 3, and that that was an inflation read harder than appreciated, but it didn't because we have growth slowing down. Um, you know, not only our economy but other major economies are slowing down. So it seems like the dollar really didn't care for that, you know, for that hot print. Now we do know that PCE is the Fed's preferred. My voice does break up time to time. We do know that the PCE is the Fed's preferred measure of inflation, which is coming out this Friday. So I want to see how the market reacts to that. And we also have GDP coming on Wednesday, I believe, or I'm sorry, PCE comes on Friday. GDP comes out, I believe, tomorrow, and it's expected to come in weaker than forecast. Cause a sell-off in other markets, and it could allow for us to get better entries in things like the euro or the pound. My thoughts on dollar Swiss.
Hey guys, sorry again for the technical difficulties. I think Alan is probably trying to sort something out. I'll step in here just until. Market is still selling off here, guys. I don't know if you've been watching indices here, down 0.71% for NASDAQ. S&P's down 0.4. Gold, silver down here as well. Bitcoin, my goodness, guys, look at the sell-off here, accelerating. Really interesting. Bitcoin's definitely going to have to be our chart of the day. By the way, if you guys want our chart of the day videos, make sure to join our Telegram channel. We drop them in there throughout the week. So like, for example, yesterday's chart of the day was silver. So if you want that chart of the day sent to you, take a second, join our free Telegram channel, and that will get sent to you via Telegram. If you don't have Telegram, maybe Chandler, if you could drop the Discord link as well. We should probably start dropping those in there as well. Bitcoin down 4.64%. I saw somebody asking about asking Alan about where can Bitcoin go, and I would draw the same level for cryptocurrency. I am staying well away from crypto right now. I mean, I have been staying on the sidelines for crypto for a couple weeks. I traded into this all-time high, and when it failed to continue, I actually trailed out and took profits on my Bitcoin trade. But the follow through here to the downside is concerning. And you might get a bounce here, but I just feel like there's not really, well, I don't even feel like there's just no, look at the weekly chart. There is no clear level here. The zone to zone concept is pretty concerning. So Alan's thought of, 70,000, 71,000 as your next key level of support. Is that far away? Sure. But look, how far away is that nominally? It's $16,000 a coin away. How far have we dropped so far? 22. So could it happen? Absolutely, it could happen. Bitcoin is super volatile. You don't get to have those types of gains in Bitcoin without accepting the drops can be pretty ugly too. I think Alan restarted his computer, guys. We're going to throw the show back over to him. So maybe we'll just play a quick break, set that up, and then we'll be back with Alan just after this. Be right back.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share edge finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Hello, everyone. I am back. My sincere apologies. This is a friendly reminder to everyone that we should all pay our internet bills. Now, my computer has been with me for a long time, and I think the age is showing on this thing. So I'm going to evaluate, see what went wrong here, but I hope this doesn't happen again. Would it be possible if you guys, everyone, let's check here. Pictures frozen. This is okay. I'll and I realize, so we could get a refresher as to where we can see the charts. Okay. Okay, so I remember someone asked me, thoughts on the dollar Swiss. And so if I am going to continue this dollar rally and shorting the other pairs, for example, like the euro, then there's only two assets that I think I'm going to consider when doing this. One is going to be the dollar Swiss. Now, if we see the dollar Swiss starting to appreciate from this level here, and I want to see what this level does once we get GDP and PCE comes in, and I want to see how the market interprets that and if it ignores the PCE or not. But this is a level that I would like relative strength. If we see that the dollar Swiss is appreciating, that means that on the contrary, the Swiss is getting weaker. And so we still get some, for example, if the yen stays the same or the yen continues to appreciate, then my Swiss yen position, if we're looking at just relative strength, will also do pretty well. And so I think it's a good one. We did see that the dollar Swiss has broken this level here. Now we're approaching this one. So I want to see how that one reacts. And so if I'm choosing between the euro and the dollar Swiss, yeah, FX shadow it did. Then I would go ahead and enter through dollar Swiss. That would be my favorable one. But I do also, if we're looking as to the dollar, playing the dollar strength, the euro dollar is the one that holds the most weight as far as the dollar index, because the dollar index, all it does, it tracks a basket of this is another good way of playing, if you want to just play the dollars, is through the euro. Huge scalp right now on CAD yen. Very could be. EU going up. Only edge, I agree. That's why I didn't take this initial position here at the 105 handle, is because I was kind of skeptical on how we're just holding this level. When I trade, what I like to do is trade levels that are bouncing or rejecting very, very clearly and obviously. And so before, what would happen at this 105, you can see here we rejected it, here as well. When we broke, we rejected it. And now we're just lingering here. So only the 5 or 106 handle. Yeah, that's exactly how I'm thinking of it. If I can get a better, price, a more premium, then I'm, it makes perfect sense to go ahead and wait for that. It keeps cutting in and out. Man, that is so annoying. I'm so sorry, guys. Lee James, consumer confidence came in worse than expected. Well, I have an intraday position on the dollar yen, which that would help. And this could help us creep up and get more premium prices for your longer term euro. But pretty much I'm flat. I'm just waiting for more data. I want to see some obvious direction. I want to be more confident whether we're going in this, because right now we're just hanging out. We've been hanging out in this level for a while. Max minus 5% hit. Oh no. If you followed your rules to a T and you followed your system, then the loss is not that bad. It's just part of the process. Over time, you will be in the positive. You'll have a net positive. It's not my day, ball out. It isn't, man. It's been a tough week. For a little bit. I was traveling on the road, and I just got in. I just got home yesterday night, and that's why I didn't make a weekly outlook. So I do plan on completing that, and I'll definitely have one out. When we make it rich, we're gonna look back like, Alan, remember you couldn't pay your internet. Oh yeah, I'm ready for that day. You know, my girlfriend's home. She's on her work computer. She is fine. She's doing her work. She's not having any issues. I think it's this dinosaur of a computer that I have. I built this thing when I was maybe 13 years old, 12 years old, and I'm 23 now. So, and I haven't upgraded the hardware at all. So it may be time to yeah, it's definitely time to upgrade. Yeah, I could write it off. Definitely. 10-year-old computer, she gives me crap about it all the time. To her, it's really slow, but to me, it works just fine. She just said it's very slow, but she said it takes a minute to load up a tab. But I can play Counter Strike on this thing pretty good, no problems. Australian Swiss. I saw this request before, so I'm gonna go ahead and help look at that. Australian Swiss here is not something I really look at. I think I have some drawings here, but let's see. Daily. Now my levels, guys, when I'm trading, I go ahead and draw levels that even may seem out of reach because I like to look for premiums. And my trading style is I wait for a premium or discounted entry that has, that will let me know very fast if I'm right or wrong. And I always start with slower size. And if this level holds, or if a level holds, and we start seeing some clear direction in my favor, then I go ahead and start adding to the position. And that's my way of cutting losses very small and quickly and adding on to winners and letting them become very big. Now, the only downside is that my levels sometimes seem very far out of reach. So there's a lot of times where I and wait, then you know, get in maybe a little bit more prematurely and be in drawdown. Um, I would prefer to wait. Are you a technical trader or fundamental? I am very much fundamental heavily first. I think the technical aspect of it is very simple. Like what you just seen here, me drop these levels. It took me maybe 30 seconds or less, and I go ahead and just wait for those levels. But I want to monitor the outlook, the fundamentals behind the moves, and see if my direction is still, if it still makes sense. So I think I spend like maybe 80% of my time um, reading, keeping up with the markets, and maybe watch the markets even when markets are, you could say, closed. I do just like to see. And when you have
I'm back, guys. Sorry about that. Yeah, I think poor Alan is he is grinding it out for us today. He's got some internet issues, some PC issues or something. Appreciate him pushing on regardless. Somebody mentioned, I'm listening while I do other things, but somebody mentioned Bitcoin is bearish on the Edge Finder. It is not yet bearish. I checked that because I was interested. Bitcoin getting a neutral reading, a -3 score. So nothing, not quite bearish, but price action certainly looks ugly for Bitcoin, down 5% today, following the recent sell-offs that we've been recently seeing. That's pretty strong, strongly bearish price action wise. I wouldn't short Bitcoin either. The bounces can be violent. Like we could be up 5% tomorrow just based on the way this thing moves. But I definitely remain pretty cautious on indices and on Bitcoin. My silver trade looks like I might get stopped out, which is no fun, but it is what it is. Momentum seems to be shifting. The one trade that's going rock star right now for me is TLT. TLT is ripping 1.4% today. This is awesome. Momentum seems to finally be coming back into this bond ETF. I've pointed out many times that bearishness on the yen oftentimes coincides with bullishness for TLT. No problem now when it happens. PC's cooked. Sorry, everyone. That's a legendary computer. He mentioned he built it when he was 13, so it's all good. We've got a couple minutes, and then I believe Chris Pulver's coming on to take over the show. But yeah, TLT's working magic right now. I'm just not going to touch it. I don't really want to sell covered calls on this or cap my upside. I think you're finally getting a bit of a longer term breakout here on TLT. Come back to this trend line, once, twice, tried here, failed out, came back, failed out. Finally seems like you're getting momentum here to the upside. And bonds seem to be doing the thing that many investors have been waiting for them to do for a long time, which is when stocks drop, TLT actually pops. We talked earlier about how a lot of times people think dollar down means stocks down, and how simply wrong that is, because it shows you don't fully understand the way the dollar index moves. Dollar index going down on inflation cooling, yeah, that's stocks bullish. But dollar index going down on consumer sentiment coming out weak, following other sentiment indicators coming out weak, PMIs coming out weak, GDP coming in weaker than expected. Look, that kind of dollar weakness is not bullish for stocks. It's actually bearish for stocks. So dollar index does not move inversely to the stock market. Get that out of your head, because it's a dangerous thing to think. Stocks lower here, however, bonds higher, is a dynamic of potential slowdown in the economy concerns. That is the theme right now. You got NASDAQ down 1.3% here today, S&P down 0.8%, TLT almost up 1.5% on the day. This has been the definition of dead money for the last few years. But I like TLT as a bit of a hedge. I'm surprised, I suppose, that it's working so well right now, but so is the market that stocks are falling. I mean, that's stocks were expected to just rip all year, and now you've got big complete sell-offs. In fact, I think, okay, we're not quite there, but we've erased a ton of the gains post-election. You can see post-election, we went up almost 10% from that, election day announcement, all that stuff. Well, I guess if you count November 5th, right? So peak to trough, that was an 11% rally. We've given back a good bit of that, now up just about 5.3% since November. So, it's a market that is trying to grapple with this idea that you might be getting some slowing growth. Some tariff concerns are causing, outlook for the economy, both from the consumer level and from a lot of business perspective levels, to deteriorate a little bit. I mean, you can see that this is not something I'm just, making up. We can take a look at, for example, the PMIs, right? PMIs, services make up 70% of the US economy. They missed forecast pretty substantially. So you're seeing misses on some of the outlook. I believe that we also added economic growth. There it is. Consumer confidence. Ta-da! New indicator on the Edge Finder. Unlocked. New boss unlocked. 104.1 compared to what was the latest forecast. We're looking at CB consumer confidence, January 28th numbers. Oh, so this is the one that came out this morning. I don't think it's updated yet in the Edge Finder. Stocks selling off again. My goodness. Just plummeting there. Bitcoin 5.4. Yes, so CB consumer confidence came in at 98.3 compared to forecasts of 102.7. I mean, you're seeing sentiment in this market is weakening, right? People are thinking, okay, tariffs might shake up the picture here. So you've got, at the same time, you've got consumer confidence coming in. You've got Bitcoin down 5.5%. 86,500, let's call it. Silver and gold also taking part in the selling. NASDAQ down 1.5 now. S&P 0.9. Got a bit of follow through for the first time in a while for stock indices. Peak to trough, you're looking at still only 3.5% for S&P, but you got NAS down at one peak to trough here. 5.3. So, this, I would say this is the first time in a while we've actually seen some real selling, some follow through selling, if you will. We've had just multiple months of every blip getting bought aggressively. The big question, this week is, will NVIDIA save the day? With Wednesday's after the bell report, NVIDIA is like the last hope, I suppose, for a lot of the tech rally, graveyard that we're seeing. Take a look at a whole list of names. I talked about them earlier. Palantir down another 5%. There's a 31% sell off in that stock. You got Tesla down 37% from the highs. I mean, you've got some serious selling in momentum stocks. Take a look at CrowdStrike, right? Very exciting, kind of fun momentum stock, down 18+% so far and rising. I mean, you've got momentum here to the downside. TLT, the only thing, like I said, that is working well for me right now. My silver trade probably going to get stopped out, which is fine. VIX is spiking up 10% here today. I don't have a lot of U.S. equities, which I'm very grateful for right now, but still holding off. I don't have any Bitcoin. I don't have any Ethereum. So we'll see. I'm going to look for some opportunities. If I take any trades, I will share them inside of our Discord VIP group. Up next, we're going to have Chris Pulver take over the show, who also has a service within our Discord. You can see all of his trading signals and my trading signals. If that's something you're interested in, we'll drop a link here to chat directly to our support team. If you'd like to speak to us about getting set up with those signals, you can get notified anytime I take a trade. We've got a lot of movement in markets right now, and I imagine there will be some great opportunities if we can find them. If you want to see every trade I take directly to your phone, send us a direct message and our support team will hook you up with access to a membership where you can see my trades or Chris Pulver's trades, who's going to take over the show just after this quick break. We'll be right back with Chris Pulver.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. We have a little bit more of a slide in the markets. Here is what I'm looking at, a little bit bigger picture. So the last few weeks, I've got my call condors looking good. Those are all profit. That's fine. I don't think I have that trade in any longer. That was closed out for profit back when we started to fade this late February move. Let me double check that. Anything in the 6,300s on the SPX. I did take, I used my collar position, which is a sell, call, buy, put, and micro strategy. I did end up closing out for like a $22 gain on the put side, but I reestablished another put, saved me about $5 net. I'm still holding a collar trade with a 310 covered call that's like $60 of credit, which is nice, but I'm going to just hang in there for a little bit, trying to protect the downside. Let's talk through this all today. As Nick just said, TLT is doing pretty well. TLT is up around $9,300. Dog's making some noise. TLT is looking good. I may end up getting some of my TLT called away. If it's in the money, then I'll probably roll it. Otherwise, I might just let it get called away because it's a $2,000 or $3,000 trade per account. So there's still plenty of upside here. I'm only about 14-15% of my max profit. So there's still plenty of profit to go. Time wise, I mean, I just need price to get up over 92. But if we're there and I can close it out for mostly my $27 credit, then I'm probably going to do that. So let's see here. I was looking at SPX into the 6,000s. So I do have call condor here. Let me have a quick peek at this account here. So Feb 28th, 1, 2, 3, 4. That trade is looking pretty good for profit. Let me check the numbers on this one. Okay, let me see if I can close this out for a 10-cent debit. That was an iron condor. Closed out for profit on the iron condor. And then March. Same thing here. 1, 2, 3, 4. That is an iron condor. Okay, those trades are still looking fine. Delta Y is still really solid. I'll hang in there a little bit longer on that one. 2, 3, 4. Anything else? March 31st. Yeah, condor stuff looking pretty good. This one, 63.40. This one is the trade I was talking about. This is a call condor, so 63.40 by 50. That's a $10 wide trap. And then I sold and sold. That came in for a net credit. See what this one's trading for right now. Yep, this one should be profitable. So I pulled in a couple of dollars on that. Let me add the math on that. So that was 63.40, 50, 64.20, and 64.45. Crunch the numbers. So minus 36.71, plus 34.19, plus 20.59, minus 17.06. Pulled in $1 credit on that one with a trap. Right now, that dollar is trading for about 5 cents. See if I can just close this one down a little bit. So if I can close it out for like 5 or 10 cents, I'll just take the profit. We should be good. 2, 3, 4. All calls. All right. I'll manage that one in just a sec. I've got a covered call on Snapchat. Coca-Cola got called away last week. Hedges are looking good. So I put them on. That's the important thing. Timing wise was pretty decent. So E-mini hedges up around $2,100. E-mini hedge, different expiration, about $1,300. Micro E-mini hedge up around $5,500. I'm just going to let those go. Those are there to help protect me to additional sliding. If we get there, that would be on my E-mini side. So I put in the hedge up here near the all-time highs. So far, so good. That's the right direction. How much do I have or what direction do I want to take them? Well, if they're coming down to like the 144, the 200 moving average, that is where I want the hedge to be taking profit. So if we flush lower, and I mean percentage wise, if we dropped another, let's say 3 to 5%, another 3 to 5%, I'm taking profit on those hedges. We're looking at like a 5,700. I think that's my sell side. This one. So this is a 56. Okay, that one's looking good. This one is same thing. This one is my hedge. I have a pure downside hedge. So my April 30th. Call side. So I've got 6175, 6375, and a 6175 by 5,700 there. So I put the trade on for both. If I just look at the put side management, I've got 62 by 5,725, and I've got 6175 by 5,700. Those would be the trades that be offering the most profit for right now. All right, so those are looking okay. All right, Japanese yen. Let's take a look at currency strength. I was looking at AAI sentiment, which we had a little bearish positioning as far as the sentiment goes. This is a contrarian play. I'm very curious how this is going to print this week. If more and more, if more and more investors are getting positioned bearish, if that's actually going to offer up a buying opportunity somewhere in here. I don't know how aggressive the bulls are going to be. If they're going to step in, it should be there. There's a little gap right here around 590 to 585. This is SPX or SPY. So SPX around the 5,900 to 5,860 zone. The SPY around the 590 to 585 zone. If it gets a little nastier out there, this is, we don't know. I mean, obviously the market is sliding for 3 days in a row now. But if we pick up a little bid right in this first gap, that'll be interesting. If we don't, then I'm looking for equal high, equal low. If we measure this move, this is where things get a little gnarly. If we go high to low, and it breaks that low, that measure move gets me to this outer area. So this would be, support and support. We could potentially be looking 550 to 540 zone, which would feel pretty terrible. Straight up, like it'd feel terrible to see this market within, let's say, a month, flushes from all-time highs down to about 8, 9, 10%. So where does that get us? If we come down to like 550, that's a 10.5% correction on the S&P. That's a pretty big one. Anything in that 10 to, let's say, 12% zone, I'm going to be hopefully just deploying some cash in here and positioning kind of little bites. And if we catch a, close below, close above, that might help put in a little bit of a bottom. We'll see if the market's eager enough to buy the dip. Okay. So the nice thing is having cash on the sidelines, being somewhat diversified. Bitcoin's not looking great. Bitcoin broke some pretty good support. I'm around that 91,000 mark. And, there's two levels I talked about. If we break 91, okay, look out below. And then the next level would be around the 75. So we're breaking structure. We're breaking support here. There is a potential bounce off the 200 moving average. But if we don't see an aggressive candle pushing this thing right back above this 91K mark, that's going to be my outlook on Bitcoin. If we don't close back above 91K, this thing still has some pressure to the downside. I would be looking left on this chart. Previous highs around 74,000. Okay. So we're definitely seeing some tightening in the markets. We're seeing some flows that are favoring risk off right now. Bonds are looking pretty darn good. Does this help yields go lower? A little bit, right? Yields are dramatically lower. That's actually pretty helpful to see that yields are down 11% from these recent highs. That's helping our longer term bond prices quite a bit. My call side is 92. I did a roll on this for 92. Let me double check my TLT. 92 sell call for 15 cents, so 21.17. I have to update this in my chart. So this is a 331 rolled to 430. Okay, so I got a 430 rolled to 430, expiration 92, sell call, break even 21.17 debit, where the price would be 86.17. So if 86.17 is my price break even, 92 would be where it gets called away. That's just under $6. So 92 minus 86.17, 583. It's about $2,300 gain per account, which isn't bad. I've got 400 contracts, 200 contracts on a lot of these accounts. But part of me wants to be a little bit more bullish on bonds. I'm not. I think I'm just going to take this as a bit of a one-off. But yield-wise, like this is somewhat encouraging. I'm hoping that the yields will continue to fall. I'm going to set a chart alarm. Let's move it down here actually and see if this actually does some pretty impressive coming back. I don't know if we're going to get too much lower than 4%, but I certainly wouldn't mind seeing bonds go as low as possible. 4.15. I'll set a 4.20 chart alarm here. Sliding lower. Okay. So let's talk top down. Room to fall. It's pretty simple. NVIDIA has earnings tomorrow. I hate to say it, but the entire market's going to care. So NVIDIA tomorrow after market, we are sliding pretty hard. I thought NVIDIA realistically would be kind of hanging in there right before earnings and kind of staying right in the middle between this high and this low. We're already seeing a lot of pre-market move where just flows are pushing prices lower. I'm not going to position for NVIDIA. I think that if it's in the middle, we can go higher, we can go lower. It's a bit of a toss-up trade. Now the flows have come in for the last 3 days to follow suit. Look, it's pretty simple. Guess what stock's going to be down? Mags. Boom. You want to see what the market's selling off 3 days in a row? Mags. You have so much market cap in this between all of your, and you can throw in even 8 here. Like it doesn't include AVG or Broadcom, but basically your Mag 7 selling off for 3 days in a row, and that move, and this is going to be wild. I don't know if the percentage is going to be the same, but we have a drop of around 7% in the Mags. Okay, individual stocks, Apple's obviously barely dropping. Amazon down a decent amount. I've got to check on my puts actually to see how those are doing. That ratio spread, I might actually get a sign on this thing if it doesn't bounce off the 200 moving average. Google sliding a little bit lower. I mean, look, it just pressure's on, right? Apple's back up to the highs, but probably fading. This wouldn't surprise me if Apple hits resistance and comes back down into here, probably finding more support off this 200 moving average. Amazon sliding a decent amount off these highs. I still like Amazon longer term, but it's down about 15%. Google also off this quantum computing leap, and then we're coming down, about 15.5%. Meta, big drop from the highs. This is going to be profit for this week. Meta is also finally cooperating, down about 12.5% with a lot more room to go. I mean, if you want to look at dollar cost averaging on Meta, I'd like to scoop it up here around that 200 moving average to see if that trend stays intact. Microsoft also breaching a little bit of support, but we've got this 390 zone that could still hold up really nicely. Microsoft also is a ways from the all-time highs. Netflix cooperating from the highs, took that broke wing butterfly off, has some ratio spreads. NVIDIA sliding, still has some good structure one way or the other, right? Highs up here, Lows, I'd say major lows would be around, we'll say like the 110 to 100 zone, 110 to 100 for major lows, and then the 140 to 150 for major highs. I could see NVIDIA also just staying in the middle, and the market's not quite sure where to go. Okay, we'll find out. Tesla down to 308, another fresh low on Tesla. I'm just going to continue to dollar cost average in. So a little bit of chunk there at 362, another one pending at 285. We do have the 200 moving average sitting right here. I wouldn't just call the falling knife here, just in case it keeps sliding. I could see 300. I could see 275. If there's a bounce zone, that's where I'd be looking for it. But just be careful on throwing money when it looks like prices are falling. Sometimes the best way to play it is you got to sacrifice some price precision in order to get proven right and get some confirmation of what you want to see. If you want to see something green on NVIDIA, then you're clearly going to wait for something to turn, because right now it's all red. And right now MAGS is all red. And right now the indexes are all red. Berkshire Hathaway had earnings, popped to all-time highs. This is, Warren Buffett, cash holder, net seller of stocks, cranking to all-time highs. I mean, I've got a ratio spread down here, which is working out pretty nicely. Bonds are doing well, like we said. Let's go gold, silver, oil, dollar index, risk on, risk off trading. Here's currency strength. Today, the Japanese yen getting stronger. That's helping my 6J FXY positions. Swiss getting stronger. That's not helping my Forex pairs. Dollar's weaker, CAD's weaker, Aussie, New Zealand's weaker. Interesting. But Japanese yen, Swiss, that's showing some risk off flows for the day, for right now. I'll revisit this in the week when this thing prints a new one for the 25th, I think, 26th. 26th, yeah. So we should be printing a new AAI sentiment on Wednesday. Forex Factory, I mean, nothing crazy. Consumer confidence was down a little bit. We got some Fed speakers today. We've got NVIDIA tomorrow. Like, none of this pops up in economic calendar. We have G20 meetings starting. Is that day 1 on Wednesday? How long do they go? Day 2. So they probably go for the rest of the week. We have GDP on Thursday for the U.S. post NVIDIA earnings. Got it. Futures-wise, catching a little bit of a bid. What is this blue line that I have? I put it on there for a reason. Support. There we go. Okay, this is where we're at. Okay, let's go dollar, gold, silver, oil. We did Bitcoin briefly because it's below that 91K mark. Volatility one day is up a decent amount, or was rather, up from this would have been Friday. So big one day move in VIX on Friday. We're seeing the 30-day VIX up again. Okay, look, this is an important spot for the VIX. And why is it important? Because one extra nudge higher spells a lot of pain ahead. And this is one thing that traders need to be ready for. Look, we don't go from 10 to 60, okay? We go from 10 to 20 and then 20 to 40. That's the issue. That's the pain point. So right now with the VIX elevated, we're about to see how much these markets want to come in for dips. If the market's going to buy the dip, then this VIX probably taps out around like 20 to 22 and starts to fade. That would be a good thing. If you're looking for a buying opportunity, you want to see this VIX fade pretty hard. My concern is that we had 2 of these outlier events. Okay. This one was a weekend and this one was an FOMC day. So I don't really see, outside of NVIDIA being a major catalyst, I don't see the VIX necessarily having one of those wild and crazy days, which means we might be elevated, but still contained. Now, go back to 2022. 2022 pretty much looked like this the entire year. It wasn't a crazy outlier VIX, but it was a steady like 20 to 30 VIX the entire year until we finally turned in September, October 2022. So here is 2022. Most of that bear market was played between the 20 and 30 handle on VIX, right? And what did that look like in price? Well, flush down, rip up, flush down, rip up, flush down, rip up, flush down, built the bottom, based here, and then there's your 2022 recovery. But that was 8 or 9 months of that. Okay. So I don't think that's the new normal unless we're going to see just a monster deleveraging right now. But look, I mean, this right now looks like child's play. That was a lot more volatility in 2022. This is child's play. So unless we have a spike up here and we're kind of dancing around in this area, then maybe we're talking, corrections that are bear market worthy. Not yet though. All right, SVXY, anything here? Nope. If we get a big event in the VIX, then I'll probably end up buying and dabbling with some SVXY to sell that. That's this basically the being short VIX. To do that, I want to see some big extremes. Dollar index flushing down a little bit lower. I'm okay with that. This 106 to 105.50 zone. Oil, another drop on oil. Watch out for that floor. This is why I'm not doing anything on oil right now. I'm trying to stay out of it. Natural gas, still trying to get long. I am long on UNG. It's looking fine. Gold's finally making a decisive turn to the downside. We've only been saying this for the last couple months, just waiting for gold to give us a reasonable correction. Okay, why is gold dropping? I don't know. We can probably attach some type of news event to it or some why catalyst. Investors cash in, trade war persists. Cash in what? Cash in profits? Sure. I mean, gold's been up how much? Since the start of 2023. Okay. I mean, gold has essentially kept pace with the index. It's crazy. Like that's a very unusual performance for gold to actually keep pace or even outpace the S&P. So cashing in, yeah, maybe. To what degree? I mean, maybe cashing into this level, maybe cashing into some type of dynamic support, but I'd say cash in looking to still buy dips. I mean, if we have geopolitical concerns persisting, then I would still expect gold to maintain a bid. But if anybody's been actively looking for shorts on gold, well, today looks a little bit more encouraging. I'm not a bear on gold. I think that gold, if it sells off, it's just get to a level that looks more attractive, find some necessary dynamic support, and then start to rebuild. Right. So once we flush down, we start to rebuild, and then we get a trend. We start to rebuild, we get a trend. So if we can get this kind of cleanse or correction over with, then starting looking for correction, starting to look to close back above, and then stop losses, and then off you go. Revisit highs, get to all-time highs. Gold could really maintain a lot of bids. I mean, the fact that we are turning now and not getting to 3,000, I guess we'll see how much manipulation we have in price action. If we go down for the day and then go back to all-time highs, I think that is some games that gold is playing. We might be carving out more of a top. But I'm just going to wait. If gold pulls back, good. Pull back here. I'll pull back here, and I'll get long and establish some fresh longs. Okay, what else do we have? Silver's pulling back a little bit. GLD, fine. I can accept that. Let's go silver. Little pullback, still well supported at 29 and 26. SLV, the shares that I have. That was already for 2026. Diagonal spread, that's looking fine. That's out to 2027. Bitcoin at 86, right at the 200 moving average. We'll see if there's a bounce. I am going to put in a trade right now. We're at 49. I think there is. I've got some ratio spreads on here. I'm going to go. Let's see here. I mean, there could probably be another $3, $4, $5 of movement to the downside. I'm going to put on a trade. Let me see something right now. I'm going to take a look at IBIT. And let me look at a trade that is, I've got a January 2026. I might just do it again. I might go to March of 2026. So if I were to do this trade right here, this offers me 58 cents to essentially take a at the money trade. That's not bad. I could do an at the money for 55 cents. There is potential assignment risk. Downside is maybe limited to a couple of dollars. I do have some ratio spreads. Let me double check and make sure I'm not looking at any assignment risk here. So I have a ratio spread 46 by 45. Okay, so I do have some exposure there to potentially have some assignment. 52 by 51, 52 by 51, 43 by 42. These are all credit spreads. And then this is a covered call on the shares that I have. Right now, my covered call is up around 97%. It's better off if I just take the profit and move on. I'm not going to get much out of this. I collected 293. I'm trading for 285. I might as well just close this out for profit and then add another call. So I'm going to collect. What was my profit there? So max profit on the call would be 293. I can close this down for, yeah, for me to wait an extra 24 days to make 9 cents doesn't make any sense. So I'll take the 293. I'll close it out for like 284 net. See if I can get this for 8 cents. Okay, 9 cents bid or 9 cents ask. Close for 9 cents. All right, I'm taking the income there. It's going to do this quick on these IBITs. So IBIT 67 call up about 97%. That's $2.92 credit. Take the 9 cents off. All right, I'm going to update this on IBIT. Okay. Just looking at my break evens for a sec. Adding a collar trade, which I have, the 67 by 40. All right, so I'm going to take the 67 off. The 40 is still not paying. It's not paying out. It was an out of the money. I'll just let that marinate in case we get a really nasty push to the downside. But I'm going to take a majority of that profit. Okay, let me just take the covered calls off real quick. So 67. Closing. Let me see what this would do if I did the 40 by 67. Close it out for 21 cents credits. So I can still take, that's actually lowering my cost base a little bit. That's actually fine. Protection. All right, let me debate that. So I can close out, reestablish another collar trade. March 21st isn't that far away. It's only 24 days out. So I think on this one, so I bought it for $1.03. All right, I'll do the math on that. So if I close down this collar trade, all right, I could probably save this for offline, but basically what I'm going to do is I'm going to look to manage the collar trade for a net profit and then reestablish and create more time in the trade. I probably want to get this out another 40 to 60 days. And because I don't think there's going to be enough time to necessarily, unless we have like a nasty flush down, this $40 put is not really going to pay me what I want. So the call was fine. This is up, 97% of my profit. And the put is still slightly in the red, but it's enough to offset it by about a 22-cent net credit. So that does lower my cost basis a little bit, but I'd rather create a new collar 40 to 60 days out. And if I want to be more aggressive on the call side, I could just sell more premium, which may not be a bad thing. But if the reason I don't want to necessarily sell calls too aggressively is if Bitcoin does take a turn and it starts to rally, I don't want to get in the way of it. I'm looking at, like, if I'm going to get it called away, let's get it called away at recent all-time highs. Okay, so I got to play around with that a little bit. At the very least, let me see this one. Closing down, reestablishing another position. IBIT right here. Close for, see if I get 30 cents out of that. Bid price 28, let's try 29. Okay, 28 cents there. This one should be closing out for 28 cents. Good. This one I'm just going to close out the entire thing. So this collar trade should close out for a little profit. 21 cents. Okay. See if I can close that for 21 cents credit. 20 cents credit. Freaking turds, 19 cents. Let's go. There we go. Okay, so I'm closing the collar trade out for a net win. I'm going to reestablish a new collar. Close at 19. Fill, please. The mid is 21. I'm asking for 19 cents. Fill my bid price. All right. Taking it down to 18. That's okay. 40 by 67. Try 19 again. Not interested. 18. Come on, dude. This is ridiculous. I'm below the bid price, not getting filled. Stupid, stupid. All right. 17. Taking it off the table for 17. 40, 67. Closed. 40 and 67. Okay. That one's good. This one has some shares. 40, 67. Fill the 18 cents. Okay, good. This one may take them as that's out. I may take the assignment on this one. 49 by 48, 50 by 51, ratio spread. Okay, that one might take some assignment. That's fine. That is a margin account. Should be good there. $45 put. Okay, so I want to take a quick peek at another collar trade on IBIT. So that's closed out. We're going to look at another collar trade. Let's go to, how far out can I go? 51 days, 80 days to May. So I wouldn't mind getting it called away at recent highs above 60. I want to have some put protection. So anything in the 60s on the call side, and then finance that with a buy put, hopefully just a couple bucks lower. So let me see if I can go 60. So I can sell the 60 here. I go a little bit lower on the delta side. So like a 64 is a 20 delta. That's decent. That's quite a ways out of the money. I might just take it where it's like, give me $1. Give me $1 and change. If I can net $1 lower my cost basis. 64 is up there. We'd have to hit all-time highs on Bitcoin, which, you know, could happen, but probably a little bit of a tall order right now. So 64 is a 20 delta. Can I finance that? The put side is just pretty expensive. So we could grab a little credit here. Going out far enough. Maybe a 40. Fudge muffin. That's an 8 delta. Man, those are so low. There's enough time. If prices keeps falling, then that increases a little bit in profit, but that's really not the play. At this point, let's see. How much lower do we go? Maybe down to like $42, $43. If I'm more aggressive on the premium selling, let me see here. Maybe I go less time. If I go out 24 to 30 days, let's go out to the end of March. It's out 31 days. Are we going to hit fresh highs? $56, or I mean, I want it called away at highs. If we're going to call away, get it called away at highs. So I'll just do this. I'm going to put in just a call trade. April, right at 60 bucks. May, out a little bit farther. And I can go all the way up to like 65 or 66, grab another dollar out of this. Okay, 60 bucks. I'll take 62 for $1.52. All right, I'm going to do that. So IBIT looking for a May 16, $62 covered call for $1.50 or more. So that brings the cost basis down by $1.50. See if I can sneak in a couple pennies. Maybe be generous here. Come on, IBIT. Of course not. $1.52. Got filled at $1.52. Okay, that's fine. All right. Next up, adding a covered call here. That's the $62 for May. 62 for May. 400 shares. $1.52. Filled $1.52. 200 shares. 62. Okay, 200 shares. $1.52, hopefully. Filled. Get my trade size correct, 400 shares. $1.52, hopefully. No problem. All right, the cover call is getting filled. That's pretty good. This one, some ownership, 200 shares. 7634. $1.51, hopefully. Filled. All right, this will just take a second. 62. 200 shares. $1.50. Filled. All right. Couple more. Filled at $1.50. No exposure there. This one should have 400 shares, 300 shares. Okay, 62. 300 shares. $1.50. Filled. No shares. No shares. No shares. This one has 200. There we go. Got it. Okay. That should be everybody right there. Okay. So adding in updating my break evens. Close collar at 22 cents credit. Added May 16 expiration, 62 sell call for $1.50 credit. All right, that's it. Thanks for giving me that time. Here we go. Micro strategy, either a bounce off the 200 or a flush down to the previous highs at 200. Hopefully the stock just doesn't turn to absolute trash. Momentum stocks are clearly losing. I want to see if there's a better gauge for, I mean, we're still like 50-50 on how many stocks are staying above their 50-period moving average. So between NASDAQ, above the 50-day, it's about 60% of stocks. All right. Interesting little snippet. Watching the RSP. I marked a vertical line here, and this is 90 days for equal weight all-time highs. So I listened to an interesting podcast session yesterday. 314 Research is Warren Pies. He was on excess returns. I think it was just a replay of like some of the tidbits he had mentioned in the last couple months. But a fact that I thought was interesting was if the S&P market cap weighted makes an all-time high, which we did here, and we did here, and we did here, right? We've had 3 all-time highs back in December before the Fed. We had one, when the market was a little bit bearish on the AAII, and it was kind of a contrarian play, poked an all-time high again. This was mostly led by Mag 7 and market cap, not really broad, but that was the 24th of January, and then another poke right here on the 19th of February. Here's what this snippet is. If we make an all-time high in the SPY within 90 days, we should be looking to make all-time highs in the equal weight if you want to see a healthier, broader bull rally. Okay. So the reason I'm watching this closely is because from this all-time high in equal weight, if we go out 90 days, which is this vertical line, if we are not at these highs, then we are sitting here having this conversation about how this market is not super, market breadth-wise, it's struggling, right? So my point is, if we're going to be fading off these highs on the market cap weighted led by Mag 7, look, this is the chance for Mag 7 to drop and the chance for the market 493 stocks to pick up the slack. If in any way, shape, or form this is going to be a positive thing, well, now's the time to show your strength for 493 stocks. Because if that happens, this instrument will show some resiliency and possibly get back to the highs. Okay, or at the very least, not suck as bad. So if we go high, low, and if we go to symmetry, then yes, we can make a lower. I still like buying this. In fact, I like buying a lot of equal weighted this year because I want to get rid of some of the concentration. If we go high, low, lower, high, lower, low, I'm probably buying some more around that 170 handle. And if we get back to the highs, that's a pretty good rally. I mean, for an index, that's a decent dip in my opinion. That would be 11+% to the upside. Timing that. The SPY may outperform, maybe not, but I think if we actually broaden out, I'd almost rather take my chances with equal weight than be in the concentrated Mag 7. But point is, if we want to see a healthy bull market, we should be seeing this thing revisit highs from the all-time highs. We should be making fresh highs within 90 days. So from there to there within 90 days, or if you go back to the S&P, we should be seeing all-time highs within what's 90 days of this. Within 90 days of this, Amazon at 205. Okay. Whew. All right. Things are getting interesting. So 200 by 195 ratio spread for March. I mean, there's time. This is just pretty healthy sell-off. We're going to see what these 200 moving averages are made of. And this is the good and the bad. The good is like, well, I'm waiting for a pullback. I'm waiting for a pullback. Let's start positioning this way. And, I'm positioning for pullbacks. We just, you just never know how nasty this thing is going to get, right? Last time we had this test of the 200 moving average, it tested all the way through it and then took, maybe 10, 12 candles to get above it. So we could have a flush down to the 200 moving average, get back above it. That's a good sign that the bulls are still showing some interest. But yeah, I mean, if you're trading anything risk off, that is certainly helping. Probably my best trades right now, risk off, would be I'm hedged on ES, I'm hedged on MES, and it's multiple. So I have 2 hedges running here, and I have 1 trade and 1 hedge running here. I'm not long VIX or anything, but I will be watching SPX500. I'm still hedged with Japanese yen with FXY, which should be up. We're at some fresh highs today in FXY, so that's helping with Japanese yen. 6J is Japanese yen futures. The rest is just kind of hanging in there, watching my level, setting a bunch of chart alarms, and looking to see how price behaves. So, all right. Look, and I think it's wild that it's going to be so dependent on NVIDIA, but it probably is. Nobody knows what's going to happen this week. NVIDIA earnings are expected to be slightly higher, right? So their trend has been up. Their earnings per share is forecasted to be a little bit higher than it was before. This is 75 estimated, and right now they're estimated at 84. So another jump in EPS and another jump in revenue from 33 billion up to 38 billion. What's forward guidance on NVIDIA? I don't know. Maybe good, maybe bad. Technically speaking, this would be a really important trend line to hold. Not only the dynamic moving averages, but also the 200 moving average sitting right there, the previous lows, and this hand-drawn trend line just connecting these recent pushes. So, I mean, I don't know. If NVIDIA breaks down, man, you want to see that thing be a fake out, because if NVIDIA breaks down at a 3, whatever, this was 3.3 yesterday. Now it's 3.09. Like, we are shedding hundreds of billions of dollars in market cap. Every time this thing is down by 3, 4, 5%, we're shedding hundreds of billions of dollars in market cap. So that could be the big story. It's like, well, we had a great run for NVIDIA, and now we have a 30, 40, 50% correction. It is going to weigh hard on the overall markets. However, earnings growth has been pretty solid. Earnings momentum has been pretty solid. My concern is that this thing is priced to perfection. The fair market value is nowhere near $150. So here's NVIDIA earnings tomorrow after market, and we'll see if the market can just hang in there and not puke on itself. Insider selling, that's not a surprise. Price to earnings, price to sales, price to earnings ratio is pretty darn high. Current price 130, fair value 100. I do think for a play, it's like tech stocks are always bought at a premium, but we're going to see what this premium is made of. Because if 100 gets hit, I would hope there's buying interest. If we come down and hit 100, I'm hoping we're coming back to 150, and maybe this is just a big range trade. But this is why I'm not a stock picker this year. I'm trading a lot of options. I don't really want to own a lot of stocks, and the part of the reason why is like, look, the index might be down 7%, might be down 10%, but an individual stock could be down 20, 30, 40%. That's not the volatility that I want to deal with in my portfolio this year. Okay. So I will probably stick to the indexes as much as I possibly can. NVIDIA, Wednesday after market, is going to be a huge influence on where this thing goes. Can NVIDIA save the market in the near term? Maybe. It's right at the 200 moving average. Possibly it holds right there. Would I get bullish on NVIDIA? Not necessarily. If it goes up, that's fine, but we probably still have some type of like wedge. Maybe price just has to prove it. Maybe give a little bit more time. To be determined. I'm not really going to make a decision. I do have a bunch of puts and ratio spreads like the 115 by 110, but sold a bunch of like $75 and $80 puts. Hopefully those aren't going to come back and bite me like, well, we're talking about NVIDIA now at $70. It should be a good thing to own. Maybe it is, maybe it isn't. When the market wants to let go of something and get rid of momentum and growth stocks and go into utilities and go into industrials and go into consumer defensives, like that's not great. This is what 2022 started like. It was November 2021 when the market peaked in tech, right? Your NASDAQ peaked in November of 2021. Here. There's your November peak. So if we're going to get like a massive deleveraging, now understand that the interest rate environment was different, right? So the Fed's raising rates and the market didn't like it. So the reality was, tightening. Fed's raising rates. It's not good for growth. And we had a legit bear market. So kind of different now. The Fed is, pausing / cutting. Market's still anticipating 1 or 2 cuts this year. The Fed tool's changing all the time, which is kind of annoying. But we're still way above these all-time highs. So I would say, though, just throwing it out there, if this market gets really silly, that would be a spot I'd be looking for. If it's not enough to come back to the 200 moving average and bounce, or it's not enough to come back to this structure here and bounce, then previous all-time highs back in 2021, that's a healthy correction. So that would be unpleasant for most traders to experience a 25% pullback. On an index, you're going to see stocks that are down probably 40, 50, 60+%. So that could be pretty painful. I don't think that's the environment we're about to see, but what feels like 3 aggressive bearish selling days, we're finding some dynamic support, but it's really all about stupid NVIDIA on Wednesday. And we'll see if the market can show some resiliency. If not, look out below, aggressively watch your levels. I like this 200 moving average a ton, but man, this is, I don't know, it's a bit of a falling knife. And we'll see if it continues to stay with that pattern, or we start to see the bulls show up a little bit. So, all right, I'm going to go. I've got class coming up in about 15 minutes. So, little top down. Look, buckle up. We said there's going to be volatility. We expected pullbacks. We're getting them. Now we, be careful what you wish for, because sometimes it's not as pleasant when it's like, well, it is pulling back and it's pulling back faster. Now my option prices are all jacked up. I'm taking on some heat. I'm down another 1% today. Started out really solid, giving back a couple of gains on Friday and today. So it's not awful, but I'm watching my levels carefully, watching my monitoring all my prices, making sure my lines in the sand are safe. Probably have a lot of these trades out like 30 to 60 days. So I'll keep watching, but I got some time. All right, thanks. I will see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.